But as we continue on and years go on and these business models get to flush out, the cream starts to rise to the top, just like your Amazon and your Microsoft, came out of the dot-com era, and all these other random websites went to zero. The same things happen in cryptocurrencies, and I think over time we start to develop more and more trust as more institutions start to get into the space.
Welcome to the Finsia podcast. Today, I'm really pleased to have Ben Simpson, founder of Collective Shift, with me, who's going to talk all things crypto. We caught up a few months ago for a webinar for members, and decided then that we should catch up a little later because it's such a fast-moving part of the economy. Welcome, Ben.
Thanks, Lewis, for having me, man. It's nice to get on the podcast.
Okay, good. Question I wanted to ask, in following up from what we talked about earlier on, that it seems from the surveys I'm reading that Australians are a little bit more sceptical about crypto investing. 16% felt confident earlier this year, as opposed to 27% the previous year. How does that sit with you? What do you think about what's going on?
Yeah, I mean, if those people that are in crypto or remember a little of the news last year, we had two or three of one of the biggest crypto exchanges and quote unquote crypto banks actually blew up last year. So FTX, if you remember that, Sam
yeah.
This was a $30-40 billion company who came out and basically was committing fraud and bankrupted the exchange. A lot of people lost a lot of money. There's also another crypto exchange called Celsius that also went under, and there's also Luna and UST. Three massive crypto companies went under for all different reasons. So I think the reality is that people lacking trust in the space is obvious, and crypto is pretty there's a lot of misinformation, I guess, in the crypto space. You tend to read headlines from journalists that write about crypto that may not potentially be experts in the space, and tend to sort of exaggerate things. So when you see things like these crypto exchanges going under, people think, that obviously crypto's a scam. But it's not the case, right? Like, yes, there's a lot of stuff that happens in the space that isn't great. But the reality is, as a new technology, it attracts those people. It attracts people that want to come in and make money quickly, and it just happens. It happened in the internet era, when the .com was launched. Like, it just tends to attract those sorts of people. But as we continue on and years go on and these business models get to flush out, the cream starts to rise to the top, just like your Amazon and your Microsoft, came out of the .com era, and all these other random websites went to zero. The same things happen in cryptocurrencies, and I think over time we start to develop more and more trust as more institutions start to get into the space, which we can talk about. BlackRock, as we mentioned before the show, as these bigger institutions come into the space, people go, okay, well, it's not just some random guy in his bedroom talking about this thing anymore. There's genuine companies, big companies, institutions that are getting into this space. Let's start to look into it.
I think I don't know the exact figures, but I think we spoke about the fact that crypto in general had surged earlier this year and has continued to do so. Is that what is going on?
Yes, as of early December, Bitcoin's up around 90 to 95% in just a little over 6 months. So Bitcoin has really rallied a long way. And we've been talking about this a little while. So Collective Shift, for those who don't know, we're a crypto research and insights company. We help investors navigate the markets through like insights and analysis. And one of the beautiful things about cryptocurrency, Lewis, is it's on the blockchain. So every single transaction is recorded on an immutable ledger that anyone can see, right? So with stock market, when people buy and sell shares, you can't see that. If you go and buy Tesla shares, I can't see that you've done that. With crypto, you can see exactly what everyone is doing at any point in time through the blockchain. So what you get is this new style of analysis called on-chain analysis. So we can look and see who's buying crypto, who's selling crypto at any point, at any time of the day. And what we see is that more and more of the Bitcoin supply, more and more of Bitcoin being a limited supply asset, is being accumulated by people that haven't sold in over 2 years. About 50 or 60%, I believe, last time I checked, of the total amount of Bitcoin out there, so 21 million Bitcoin out there, 50 to 60% of that Bitcoin is owned by people that haven't sold in over 2 years, and they continue to buy more. So the people that really have conviction and really understand the value of Bitcoin continue to buy more, and that's why we see these bottoms form. Bitcoin runs in cycles, just like the stock market, but it's all built around Bitcoin because of what's called the halving. We talk about it a little bit more, but basically every 4 years, it's very, very cyclical, these cycles. So it runs in bull and bear markets. Bitcoin's gone down 75% more than 5 or 6 times. It just happens. And you can see that with the on-chain analysis. And we saw that last year in December. A lot of the retail investors have given up. They've given up hope. It was the end. They were sold. But you could see the people that know what they were doing were just buying day in, day out. They continued to buy. And, we're up 90% in 6 months. And, we expect that to continue in the next year.
Does that then mean, which I'm coming to the next question I'd already thought of in terms of the age and the demographics of all those we're seeing investing in it, doesn't that sort of highlight that it is institutional investors that are in there? I certainly know of some fund managers within super funds that have spoken about it with praise. So in general, what are, if you're seeing this, what sort of demographics are we seeing investing in it?
Well, yeah, as you said, the institution. So one company in particular, a company on the NASDAQ, they're called MicroStrategy. MicroStrategy, NASDAQ listed company, they're an IT software business, nothing to do with crypto, but they hold a lot of cash on their balance sheet. And, one of the core values of Bitcoin is it's a hedge against inflation. It's a limited supply asset. It's like gold, right? There's only a limited supply. So what you get is this increase of demand and decrease of supply. You get this upwards pressure on the price, right? That's the opposite of cash. Cash continues to be printed, and they did a lot of monetary policy in the last 2 or 3 years around COVID. They printed more and more money. So you get inflation, the cost of life goes up, but cash doesn't go up. Cash stays the way it is. So if you're holding cash, you're actually losing money year on year due to inflation. And inflation's been really high the last few years. But Bitcoin is a hedge against that. So MicroStrategy understand that. And they've actually gone out over the last couple of years. They've bought 152,000 Bitcoins, over $4.17 billion of Bitcoin they own on their balance sheet, because they know by holding cash, they're losing value. But with an asset like Bitcoin, they're hedging against that, right? So you're getting more of these institutions. Then you've got really who should be buying this is like people that want to buy and hold for a long period of time, right? The superannuation, retirement funds. But there's been no real easy way to do that. Crypto is still relatively hard to get access to. So BlackRock came out, one of the biggest asset managers on the planet, 3 or 4 weeks ago, and announced that they've applied for a Bitcoin spot ETF. There's been a number of applications put through for a Bitcoin spot ETF. They've all been denied for a number of different reasons, but BlackRock have a 99.9% strike rate on getting ETFs through. So if this gets through, it's basically going to allow retirement funds, institutional capital to buy Bitcoin as easily as buying a share. And BlackRock does all the heavy lifting, right? So BlackRock's a $9 trillion asset under management firm. Bitcoin's only $500 billion, right? We believe that Bitcoin, the upside potential of Bitcoin is astronomical. What it could do if it does what it's trying to set out to, the asymmetrical upside on what it could do is just insane from where it is right now. And these institutions are starting to allow that capital to flow in.
Yeah, well, taking the question, I was going to talk about ETFs, and thanks for sort of coming in there, and because I'd seen some things written about it, and so it is interesting, isn't it, that those big institutions are doing what they're saying. And I think when you mentioned that there's a sort of it's only $500 billion. We'll see what that happens when BlackRock get hold of it as an ETF. I think that we've covered most of what I was going to talk about. You tackled the fact that there were scams, and I was going to, I don't want to round off on that and be negative, but you mentioned it at the beginning, and I just wondered, government itself has got a big thing on in ensuring that Australians are not victims of scams. And I did read recently, crypto was unfortunately one of the places where people are falling prevalently to this. What can be done though to ensure that is it outside of investing in crypto? Is it just that criminals are criminals anyway? What would you say around that?
I mean, it definitely is a problem. A lot of people, I speak to a lot of people that lose a lot of money to scammers. But scammers are scammers, right? Before crypto, it was telemarketing. Before telemarketing was, those, you've won all that money that gets posted in your mail, and you've got to contact and give your debit card details. All this, like, people find vulnerabilities in society, usually around new technology and people that aren't educated. It's why, sometimes the older generation get caught up in a lot of those crypto scams because they just don't understand, and they have trust, and it's really sad because people just take advantage of that. Some of the banks here in Australia just recently announced that they're like limiting the amount of money you can put into crypto because of the scams. And I understand they play their role, but I think there's a level of education that needs to be distributed, amongst society around this space. It is difficult to use, but in my opinion, there needs to be a level of responsibility that's got to be put on the individual to understand what they're getting into, right? If someone's ringing you up or like telling you that you've just won $100,000 like I'm sort of like come on guys, like what's good to be true usually is, and that's the same in crypto too. Handing over your money or giving access to your laptop to someone else, like we've got to think about these things a little bit. And again, it's tough to just generalize everyone in that realm. Just in such a nascent technology, like it just attracts those people because it's easier, for people to be caught up and lose their money.
Yeah, no, I get it. I mean, look, I'm going to refuse to finish on a negative side, and I think that you've touched on some of the things that us Vincia, we're all about educating our members and others as well, and there are opportunities to do that, and also we have to look after those that are vulnerable that will find themselves at the end of that. So but it's still clearly an exciting space for investors. It's I get the impression you get a lot of questions all the time. You're not thinking of setting up or coming back to work in traditional financial services.
No, I don't plan on anytime soon, Lewis. That might change one day, but I've been investing full time and working in crypto now for 7 years. Our company helps everyday Aussies get in the market and navigate it, the right way. We don't buy and sell crypto. We don't make money off you buying it. We're a purely independent, information research provider. So, the way we make money is when our clients make money, they pay their subscription fees. That's kind of the long and the short of it. So, for those that really want to go on the right route, get started properly, have the confidence and that sort of backing, we're there to help. We do a lot of free educational stuff as well. But this market is just getting started, in my opinion. Like it's been the last 2 years has been a pretty deep bear market. A lot of money sort of flushed out, but a lot of things are lining up as next year, the bull market potentially returning. So yeah, it's an exciting time.
Well, let's look forward and make a date to catch up and talk to our members again. And Ben, thank you very much for taking part. I'm sure everybody who listens to this as we go along will pick up at least a few pointers. Thank you very much.
Yeah, would love to. Thanks, Lewis.